Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we head into a fresh quarter, a number of themes are beginning to emerge as the biggest opportunities in the post-pandemic recovery. One of them is rapidly surging global inflation, which is continuing to add fuel to the red-hot supercycle across the commodities complex. Soaring commodity prices, staff shortages, logistical bottlenecks are just a handful of reasons why the price of everything is going up faster than anticipated, and inflation across the globe has surged to levels not seen since the 1990s. Whilst the price of everything is going up, economic growth appears to have peaked, with a number of indicators pointing towards slower global growth, followed by further deceleration next year, which is starting to raise fears about stagflation. The last time the world experienced stagflation was during the mid-1970s. That was when OPEC decided to embargo the sale of oil to the United States, causing prices to quadruple. It was a shock that consumers couldn't handle, and it thrust the economy into a recession. This month, oil prices, they rallied above $80 a barrel for the first time since 2018. Although there's no embargo now, disruptions as a result of the global pandemic, that has caused supplies to tighten, sending prices much higher, faster than anyone anticipated. Oil prices are now up 300% from their 2020 lows. Goldman Sachs predicts prices will hit $90 to $100 a barrel by year end. Meanwhile, the Bank of America predicts oil prices will soar to a record $200 a barrel. Nearly every economy around the world is experiencing rapidly surging inflation. Canada's annual inflation just hit the highest level in 18 years. Meanwhile, UK inflation has seen the largest jump since 1997, whilst the Eurozone inflation has hit a 13-year high. If you want to beat inflation, you can't just stockpile cash in a savings account. It won't earn interest fast enough to combat inflation. If you're wondering just how high inflation can get, last month aluminium prices soared to 13-year highs. Nickel prices, they hit 7-year highs. Uranium prices surged to a decade high. Bullish momentum also spilled over into other commodities, with sugar prices hitting 4-year highs. Cotton prices blasted through 10-year highs, whilst lithium prices surged to all-time record highs. Meanwhile, natural gas prices, they rallied to 7-year highs. Natural gas prices have soared over the last 12 months, climbing over 350%, with the benchmark futures contract now trading at the oil equivalent of $230 a barrel. Citigroup now predicts natural gas prices could more than double or triple from the current levels over the next year. There are plenty of reasons why commodities are on the move, but the key driver is rapidly surging global inflation, tightening supply, logistical bottlenecks, and booming demand across many highly essential commodities as a result of the COVID-19 pandemic. As you know, volatility creates opportunities. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they have already made in excess of 6 and 7 figures so far this year, and we still have another 3 months left to go. So if you've been kicking yourself for missing out on some of the biggest trading opportunities this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. The first market we're going to focus on here is Palladium, which had an immense move over Thursday and Friday. Palladium, the previous week on the week ahead commodity report, we went through with you in detail this massive opportunity on this market, which has broken down over 40% from the highs it reached over May of 2021. Palladium prices have broken out now over 8% in the last week. We have 3 positions on this market. In fact, last week we banked over 2,800 points on Palladium. So of course, for every 1 lot contract that you'll be trading, that's $28,000 of profit. For every 10 lot contract that you'll be trading, that's $280,000 of profit just on this market. We've also had huge gains on platinum, copper, natural gas and gold in the last week as well. With Palladium here, what you can see is an impulse move to the upside over Thursday and Friday, finally breaking above that 1900 level with quite a lot of force, and we've also seen a further acceleration to the upside after Friday's non-farm payroll data as well. So you can see here, Palladium has already reclaimed the neckline of $2,066 per ounce. Feel free to go back and watch last week's week ahead commodity report where we went through Palladium with you and the opportunity on this market. So we've seen an 8% breakout to the upside on Palladium. I congratulate you if you also capitalized on that move. Now, platinum as well gave us a great opportunity last week. So we bought into platinum at $947 per ounce. We were able to bank 800 points on platinum within 3 days, banking after the strength here from non-farm payrolls, which worked out perfectly. Again, platinum prices, they broke out just under 5% on Friday. What we talked you through last week played out. So we saw that initial pressure to the downside on Monday through to Thursday during the Asia Pacific session when China were off on their public holidays for Golden Week. And with that, that provided you some great opportunities to buy in low on the metals, especially during the Asia Pacific session when there wasn't much liquidity and when prices were under pressure. That's exactly what we did last week on copper, on palladium and platinum, catching the lows there, and we've been able to benefit from a slingshot move to the upside later on in the week once Asia came back on Thursday through to Friday, and also non-farm payroll data propelled prices significantly higher as well. So platinum also significant breakout to the upside. Platinum and palladium, both of those gave us huge gains over the last week. Also moving over to gold, this actually gave us a great opportunity after Friday's non-farm payroll to bank on strength. We closed 500 points profit here on gold at $1,777 per ounce. Our entry on this market was $1,727 per ounce. So you can see we've caught very close to the lows there and also the highs of that move as well. In fact, when we were buying into gold was right at the end of the quarter with the typical outflows that you get at the end of September, and then capitalizing on the very first trading day of October where fresh capital comes into the market. We saw a breakout and slingshot move higher over the next 3 days there for gold. So that's been also a really great move for us. But again, we're being very nimble in the market and make sure regularly, especially with gold, that when you see those breakouts in your favor, that you maximize it and take some profit off the table. Copper, another great market over the month of September and October as well. It's given multiple opportunities just to keep coming in and out of these ranges. We added again last week on Wednesday, built a position in at 4.12. We were able to bank nice quick partial profits on that on Friday. We've actually got 5 positions now on copper. All of those trades are in profit. We also capitalized on the natural gas breakout that we saw at the beginning of the last week as well, banking 650 points profit as we broke out to 7-year highs. Natural gas is also a market that I would certainly watch over the month of October. We're seeing the usual profit taking at the end of the week, which is very common, especially for natural gas at this time of year, given that it's broken out to 7-year highs. But typically over the month of October, natural gas is well supported. I would absolutely have this on your radar as we go into next week as well. And then moving over to oil. Oil prices have been on an absolute tear recently, breaking out last week 5%. Also hitting 7-year highs. The momentum in the whole commodities complex is something that you absolutely want to be taking advantage of at the moment. As you know, bull markets, they don't move up in a straight line, they zigzag, and that really presents savvy traders with back-to-back trading opportunities. One of the biggest obstacles that holds retail traders back from achieving their desired success, it's not having access to data, market intelligence to make confident decisions with accuracy in these highly lucrative markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you'll end up wasting lots of time, money and effort and have no results to show for all of your hard work. If you want to thrive and not just survive in these highly macro-driven markets, you need to adapt and utilize a professional, research-driven approach. Trading like every other misguided retail trader using outdated technical analysis or gimmicky technical indicators, that will not work. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets. We still have another 3 months left to go of this year. Time is the most valuable commodity that you have. Make sure that you don't waste it. You need to adapt your strategy to the current market conditions. You need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. This is where you're utilizing statistics, market intelligence, the facts in the market, data. Alongside that, learn and understand the daily, the weekly, the monthly, the quarterly cycle for each commodity. Marry that up with sentiment, the intermarket correlations, the ratios, your understanding of major news items which will have the biggest impact on each commodity that we're trading. Alongside that, understand capital flows, extremely important. Marry that up with key areas of liquidity, and of course understand how the hedge funds, money managers, banks and institutions are positioned in the market That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.